Hey guys, welcome to today's video. Did you know there's a way to make 10% to 40% return on your investment? You can earn 10% to 40% by investing in peer-to-peer lending or P2P lending. Basically, when you invest your money in things like a fixed deposit, corporate bond, or mutual fund, it goes to a company that uses it for their business stuff. And then you get a fixed amount of money back as interest. With peer-to-peer lending, you can also earn interest on the money you lend out, but instead of giving it to a bank or company, you give it directly to someone who needs it. These borrowers usually only need a small amount of money for a short time and don't want to go through the hassle of getting a loan from a bank. So, if you have some extra cash, you can lend it out using a peer-to-peer platform and make some money back in return. It's a pretty cool investment option. Okay, let me break it down for you. Peer-to-peer lending platforms are legal online platforms that bring borrowers and lenders together. They're regulated by the government and the RBI, which means they're legit. To make things easier, I've put the links of websites that help you lend money directly to other people online in India in the video description box. And if you like what you hear, please subscribe and hit the like button so we can help more people understand financial ideas. Now let's see how peer-to-peer lending actually works. Say, for example, you're a 30-year-old software engineer working in an IT company. You want to take a project management course to improve your skills, and you need a loan of rupees 50,000. So, you go to a peer-to-peer lending platform and register yourself as a borrower. You provide them with your financial documents like salary slips, bank statement, and ID proof. There's usually a registration fee for both borrowers and lenders. So, here's how a peer-to-peer platform works. First off, the company checks out the borrower's background by visiting their home and office to make sure they can repay the loan. Then, the borrower's loan application is put up on the platform for investors to view and submit their investment proposal. The interest rates can vary between 10% to 40% per annum based on factors like the borrower's credit score, income, and existing loans. Once the platform receives enough investment proposals to cover the loan amount, they finalize the formalities and sign a loan agreement with the borrower. This agreement is shared with all lenders as well. Then, the platform instructs the bank to transfer the money from the lender's accounts to the borrower's account. The borrower has to pay back the loan through regular EMIs that include both principal and interest amounts. These payments are made from the borrower's bank account and credited to the lender's escrow bank account. And every month, the peer-to-peer platform reports the EMI payment data to credit information companies like CBIL. Once the borrower pays all her EMIs, the loan is closed. So, here's the deal. The RBI has set some rules for peer-to-peer lending platforms. If you're a lender, you can lend up to rupees 50 lakhs in total to all borrowers on any peer-to-peer platform. And if you're a borrower, you can borrow a maximum of rupees 10 lakhs from all peer-to-peer platforms combined. But here's the catch, a lender can't lend more than rupees 50,000 to the same borrower at a time, no matter how many peer-to-peer platforms they're on. And any loan you take can't have a duration of more than 3 years. You can check out the full set of RBI instructions by following the link in the description of this video. Let's take a look at who the borrowers are in peer-to-peer lending. A lot of the borrowers are people who can't get loans from traditional places like banks and other financial institutions because of their low credit scores or no credit score at all. Borrowers can also be self-employed or have low incomes and need money for short-term needs like paying off high-interest credit card debt, buying a vehicle, improving their home, or emergency medical expenses. With peer-to-peer lending, borrowers can pay back their loan anytime after 3 months without getting charged a prepayment penalty. They can borrow as little as rupees 500, and loans can be given out in just 24 to 48 hours. Let's take a look at why it's great to borrow from peer-to-peer platforms. Interest rates for loans start as low as 10% and can go up to 40% depending on the borrower's credit profile. Peer-to-peer platforms offer quick loan approvals and disbursements, sometimes even in just a few hours. No penalty for prepayment. This means you can repay your loan early without any extra charges. Everything can be done online. You can fill out the application form, submit documents, and repay the loan online. This saves time and effort since you don't need to visit any physical offices. No need for collateral. You don't have to provide any asset as security to get a loan. Peer-to-peer platforms are more lenient when it comes to credit scores. Banks and financial institutions usually require a credit score of 750 or more, but peer-to-peer platforms offer loans to borrowers with scores as low as 600 or even to those without any credit history. Let's see what good things peer-to-peer lending can do for people who lend money. Big returns. You can earn up to 40% interest per year on loans you give out on peer-to-peer platforms. This is a lot more than what you can get from regular bank deposits or other safe investments. But there is a risk that the borrower might not pay you back and you could lose your money. Safe borrowers. Peer-to-peer platforms check a borrower's credit score and history to make sure they are safe to lend money to. You can also see this information before you lend your money. Many platforms also require multiple lenders to fund a single loan to reduce the risk of losing all your money. Regular income. When you lend money on peer-to-peer platforms, you get paid back in small monthly installments. This can be an extra source of income for you. Customizable investing. You can choose how much money you want to lend, to whom you want to lend, and for how long. You can also choose the level of risk you are willing to take on, and earn more interest if you take on more risk. You can start with as little as Rs 500 per loan. Low fees. Peer-to-peer platforms charge a fee for your investment, but it's usually pretty low, ranging from 0% to 4% of the amount you invest. Helping others. Many borrowers who use peer-to-peer platforms have no other way to get loans. By lending your money, you can help them pay for important things like medical treatment, education, or home repairs. I hope this video helped you understand peer-to-peer lending better. Don't forget to check out the links in the video description box for platforms that facilitate peer-to-peer lending in India. That's it for today's video. Give it a thumbs up if you enjoyed it and make sure to hit the subscribe button to get notified when we post new videos. Goodbye and have a nice day.